Hi guys, this is Mark Shawson, the Pattern Trader. The markets are inherently a dynamic and fluid environment. And frankly, to my mind, this is why most traders fail, and this is why most trading systems fail. If you don't have an ability to change or understand a change in direction, you will likely fail. And to my mind, this is one of the inherent problems in these EAs, these expert advisors that you download and they trade away. And primarily because they're built on certain underlying assumptions that have been back tested under historic market conditions. But then when you get an outlier like the one we've just had, the market cannot recognize that, and you may be making money for 2 weeks, 2 months, and then all of a sudden this outlier comes and it detonates it because the system doesn't have the ability to be dynamic and fluid. And perhaps the best example I can think of is if I share with you my analysis of the British pound versus New Zealand dollar and how it shifted recently from a trading bias that I've had for several years. So before I get into kind of the pound New Zealand, let me just share with you quickly a comment that we found on our Twitter account, and I'd love you to follow me on Twitter. This was from Don Fonsman, and Don says, I appreciate you, Mark. A lot of these educators send out shit signals. So that's Don's language. But frankly, I would agree with his language and his conclusions. So, Don says, I appreciate a lot of these educators send out shit signals. I've been with you for a while, and you've always sent out the very best signals. So I like to think of myself as an educator, not a trade signal provider. What you do far exceeds what I paid for the year. So Don, that is a fantastic comment. Thank you for that input. And again, for you guys, I would love you to follow us on Twitter. So in a moment, I'm going to go to the real-time charts with the pound New Zealand and show you the change of direction that I saw just a few weeks ago. I pointed out to Don and many of our members, and I made over 400 pips on observing the change in direction in the pound versus New Zealand dollar. So again, I'm going to go to the real-time charts, and I'm going to show you, based on certain foundation patterns, certain governing patterns, certain price patterns, I have largely been looking for the British pound versus New Zealand dollar to head higher over the last 3-4 years. Actually, in late 2016 and early 2017, I said to our members, be prepared for a huge move higher in pound New Zealand. And from the trough in 2016 at 165 to the crescendo that we had just recently during the pandemic crisis, the height of it, pound New Zealand shot up to 218. So we shot up over 4,000 pips in the last 3-4 years based on the observation of the patterns that I thought would lead prices higher. But then several weeks ago, I saw that that was over and likely to send prices lower. So with that said, I'm going to show you how I observe chart action, price action, and how it allows me to be fluid and dynamic. I don't just lock myself into one mode or the other. I don't define myself as a swing trader, a trend trader. I basically take my cue from the market and follow what the market tells me. So with that said, I'm going to go to the real-time charts.
On the chart before me is a real-time chart of the trading pair, the British pound versus the New Zealand dollar, and I'm looking at the chart on a weekly time frame. This means that each one of these price bars represents 1 week in history. Now, I'm very often asked, do I use the weekly charts or the daily charts? And the truth is, I use both. I toggle between the long time frame, and then I reduce it to the daily to see where to optimize my entries. Sometimes I look at the monthlies. I also look at 45-year charts. So anything that will give me a long-term objective or a long-term visualization because my objective is to take big moves out of the markets. I'm not in this game for extracting 7 pips here and 15 pips there. In the particular trade that I'm going to talk to you about, where I went short the British pound versus New Zealand dollar, I extracted over 400 pips by identifying a turn in the market, and it doesn't look like it's over yet. So with that said, as I indicated way back in the late 2016, early 2017 timeframe, upon observation of this double bottom, I posited and sent out blasts to our members that this thing was going to turn around over time. And as you can see, since bottoming out at 165, it went to 218, some 4,500 pips after it bottomed out. But after a certain price action a few weeks ago, I deduced that we were going to turn and go lower. So again, just to go over some basics, a double bottom is just what it sounds like. The market reaches a significant low, it bounces off the low, it retests the low, and when it comes up, it puts on what looks like a W or double bottom price pattern. And frankly, when it came through the neckline, which is simply the line that conjoins the entirety of the pattern, it signifies that there will be a move. Now, the scientific studies that we've indicated in many of our webinars and reports shows that after you see these patterns form, the price can then go in the indicated trajectory for at least 100 days. As you can see, this went for 4 years after that double bottom was formed. But that was then, and this is now. And the most recent time frame, right at the height of the pandemic, we see this exhaustion or blow off top, where the market made a new high for the week, and by the end of the week it closes on the low. So as you guys know, I look at not only patterns but price action, and to me this price behavior was very significant, where again the market goes to an all-time high, but by the end of the week the sellers were in control. So this was a very significant resistance area. You can see it coincides with the resistance area all the way back in 2016, and to me that's not coincidental. You hit these major potholes in the road, and they can be significant obstacles to future price progress, and you can see in this case pound New Zealand was not able to do that. So even despite the fact that this market was now pointing lower, what I mean by pointing lower, by closing on the low of the bar, indicating the sellers were in control, ultimately this bar was pointing that it was going to go lower. But the market goes where it's going to go in its own sweet time, and you can see over the past couple of weeks the market has put on this rounding top, and it was somewhere in this juncture after you could see the formation of the blow off top and the rounding top that based on my analysis of the daily charts, I sent out a signal to our members, which I'll show you now. This is a screenshot of an email that is sent every day to those on the Pattern Trader Elite program. Again, I send out a daily email with what I'm looking at, the opportunities. In this particular case, on May 14th at 4:40 p.m., upon observation of the daily chart. Again, the distinction with the weekly chart that I just talked about and the daily is that each price bar represents now one 24-hour session. So after seeing the combination of the exhaustion top and the rounding top on the weekly, I then reduce my analysis to the daily, and we see the same exhaustion top where we went to a new high around 218, and by the end of the day we closed considerably lower, indicating that that was a blow-off exhaustion top. And then you can see over the course of the next few days and weeks, we put on several significant price tops, this double top at the 210 area, and then we formed this downtrend channel. So upon observation of the exhaustion top, the double top, the trading channel, you can see that prices came to the top of this trading channel and formed what I call a key reversal, where during that session market went to a high and then closed on the low of the day. And I thought that this was a great risk reward opportunity. I sent out an email recommending that our members, like Don, sell the pound versus New Zealand dollar at 203.40. So you can see this was initially my trade setup. Now I always have a fluid stop loss and take profit based on the price discovery once my trade is triggered. Once the trade was triggered and indicating that it was going in the direction anticipated and that it was confirming all these tops, you'll see in a moment that I actually widened my take profit a couple of hundred points underneath this and ended up taking a significant chunk out of this market, over 450 pips. So here was the initial setup where the sell stop was at 203.40, the stop loss was 204.77. For those who don't understand risk and say you can't take 137 pips, you can. You just need to reduce your lot size, and that was my initial take profit, and that was widened. So you can see then I also have an explanation of what I'm looking at on the chart. I said since forming the exhaustion or double top a few weeks ago, pound New Zealand has been channeling lower. Today's key reversal at the top end of the trading channel suggests prices are poised to turn lower. So I'll go to the real-time chart, show exactly where I got in and what happened. In this chart, we are looking at a daily chart of the British pound versus New Zealand dollar. And just like on the weekly chart, again, we can see what I call this blow-off top, where we go to a major new high, and by the end of the session, we're trading considerably lower. So this is somewhat of a trap, where it traps all of these buyers who bought above here, and by the time it closes, these buyers are now trapped. So it's called a bull trap. And so once I saw that blow-off top, I saw subsequent price behavior, which indicated that prices were topping. So there's the double top that I alluded to. And this was the trading channel that has been in force and effect since we topped out at 210. And it was right in this direction where I saw this reversal right here. You can actually see the next day we creeped a little higher. But it did not take out the 204.77. That's why I keep my stop losses wide, so I don't get taken out by some arbitrary price action. And you can see ultimately this went below 2,000, and we took our profits at 199.55, some 385 pips lower. And frankly, I see that there's more to the downside here. I thought that this was a good area to take profits because you can see there's some nearby support, and I can imagine we may get some bouncing around, but I do anticipate that we will see further downside trajectory, and I will certainly alert those on our elite program of the next opportunity in pound versus New Zealand dollar. Now I'm going to show you my own execution of the sell in the pound New Zealand at 203.40 in a trading account controlled by me. Here was the sell order of the British pound versus New Zealand dollar on this date at an entry level at 203.40 as prescribed in the email I showed you. Now, some of you will point to the fact that there's no stop loss or take profit. I don't advertise this, but on certain trades that I feel some confidence in, I will monitor the trades without putting a stop loss and take profit. Again, my view on the take profit is that I'm not going to cut something off that is progressing in my way, and so I let pound New Zealand fall to a natural support area before I decided to take my profits. And you can see I eventually took profits at 199.55. Remember, my entry again was 203.40, so I made 385 pips on this particular trade, which resulted in a profit of about $82,000. So you can see that by staying in a trade, in this case was only for 5 trading days. I'll stay in a trade for days, weeks, or months depending on the objectives of each trade. But in this trade I was able to extract a healthy chunk of 380 pips out of the market in just 5 trading days.
So I hope you've got a ton of value from this video. And again, feel free to follow us on Twitter and share your comments with us. So until then, I wish you a healthy and prosperous trading day.